Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, ladies and gentlemen, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button if you're catching the premiere on YouTube or if you're catching it live here on Facebook on the Investor Show. Don't be afraid to say hi. Anyway, ladies and gentlemen, you already know we got a pretty good episode. I'm not going to be before you guys and girls long. It's been a question that people always been asking that's been plaguing a lot of people's mind. Everybody's saying, man, what's going on with the stock market? The stock market is up 33% since the May 23rd low. Since the May 23rd, we've seen the market return 33%, but we're still not certain on the economy. Unemployment is still high. Uh, Companies are still closed. What's going on? How does that make sense? Everybody's trying to make sense of it. How does that make sense? How can the stock market be up when we see that people are unemployed, people don't have jobs, businesses are still closed, we're uncertain on the economy? What's going on? How does that make sense? So today, ladies and gentlemen, we're going to talk about seven major keys and seven major steps of how to kind of help that make sense to you, if that makes sense, to make sense of why the economy is returning the way you see it returning. So if you're coming in live, if you're catching this live, definitely make sure you say afternoon. Hey, how you doing, Miss Melanie? I think she's down there in Miami, Florida, catching us live here on Facebook. Thank you. I'll be back live on YouTube next month. So you guys and girls are definitely looking forward back to being back over to the YouTube family, but we're premiering here together. But the first thing we're gonna jump straight into it, ladies and gentlemen. We don't have a lot of time, so we're gonna jump straight into it. The first thing, why are you seeing the economy bounce back the way it does? And you're saying, Prince, it don't make sense? Don't forget about the stimulus package. We had a stimulus package, a $2.3 trillion stimulus package written by the Department of Treasury, by the Department of Treasury Chair Stephen Munch. I think that's how you say his last name. But the Department of Treasury put out a $2.3 trillion stimulus package, one of the fastest stimulus packages that we've seen since any market crash. Usually, the market would crash; it would take a while to rebound. But this year, when we had this crash, you seen boom, the Federal Reserve came right out, and then boom, followed by the Department of Treasury. We got $2.3 trillion. We're going to bail out the airline industry. We're going to send people $1,200 checks. We're going to do this. We're going to do that. So that itself, ladies and gentlemen, has stimulated the economy. Remember, this is a monetary policy. A stimulus package is a monetary policy. Look at the airline industry. The airline industry has gone up over 50% since the in the last 30 days, right? Why did it go up so much? A lot of that was due to the monetary policies that was passed. Monetary policies are policies that's dealing with money that's given to corporations to help stimulate them. Now we had a stimulus package, right? So now we got to remember the stimulus package came in and it helped revive the economy. It pumped a lot of money into the stock market. It pumped a lot of money into people's pockets. It pumped a lot of money into corporations' pockets. So that's why you're seeing like, wow, what happened? We hit a downturn. Why are we up so high? Remember, we had a stimulus package. Number two, ladies and gentlemen, what did I say happened before the stimulus package? The Federal Reserve Chairman Jerome Powell came out, lowered interest rates to pretty much zero. Interest rates are so low, which is interest rates are so low that was a way to stimulate the economy. It makes stocks more attractive when interest rates are low. So you got a stimulus package followed by interest rates being so low is why you can see um, money moving to the market, right? The next thing is we got to let me get some what everybody's saying. Ryan Scott, how you doing today, sir? Thank you for tuning in. Then we got Miss Melly say everything is hot as usual in Miami. That's not too bad. It's not too bad here in Denver, Colorado. But let's get back to it, right? So, first of all, ladies and gentlemen, we saw a stimulus package. Zero interest rates is a way to stimulate the economy. So, interest rates are so low. Guess what? It makes investments more attractive. My savings account is not earning money. My checking account is not earning money. My money market account is not earning that much money. My bonds are not earning that much money. Where can I place money to get some interest? So, guess what happens? It makes stocks look more attractive. So, interest rates being low followed by a stimulus package are two reasons. Number three, it's a lesson that I learned. Money never disappears; it just moves somewhere else. So think about it. Think about if you was a hedge fund manager. Imagine somebody gave you $1 billion to manage right now. Where would you place it? You only have three options, ladies and gentlemen. You got real estate, you got stocks, and you have what's my third option? Business. Either you can invest in the businesses, you can invest in the real estate, you can invest in the stocks. So guess what? Usually when you see a market crash or a market fall, usually companies start to look for money. But guess what? The federal government wrote so many checks with the PayPal protection plan. They had not the PayPal, but the payroll protection plan. They also had the stimulus package where they bailed out the cruise lines, they bailed out a bunch of airlines, they bailed out some companies. So you didn't see too many people, so businesses didn't become that attractive. Companies wasn't that desperate because why do I need to go get an investor when I can just go to the government? The government is handing out money right now. So if you can't put money into investments, real estate is there, but guess what? Stocks are there as well. So where does if you had to manage money, where would you place it right now? You can't put it in bonds, you can't put it in savings account because the interest rates are so low. I just said they lowered the interest rates to the lowest they ever been, right? So interest rates are so low, so I can't get money off a checking or a savings or money market. The only two options I have is stocks and real estate. If I was a big money manager and I'm trying to make money right now, I don't want it sitting in cash. Cash is losing money. Cash is losing money. You have savings account, bonds, or whatnot. So where would you move the money? Where does the money go? So a lot of people are moving those money into stocks. That's why you see the stock markets going up. So people are saying, "Well, I didn't hear anything about uh, this investor buying, that person buying." You won't hear about what investors are doing right now in June until August. Guess what? The first quarter was January, February, March. 45 days after the first quarter was May. That's when hedge funds who have over $100 million release what they did during that quarter. Now we're in the second quarter, which concludes April, May, and June. We won't know who bought and sold in April, May, and June until August, 45 days after the quarter ends, on the 13F report that's reported to the SEC. Unless there's some type of big hostile takeover, then we'll hear about that right away. But until then, we don't hear about that, right? Number four, right? There are companies that benefited from the pandemic. This downturn actually boosted a lot of companies. For prime example, I made a couple, just to name a couple of them. Facebook, by all this media outrage, Facebook has benefited from more people sitting at home. More people are creating content on social media who usually didn't use social media. So you got Facebook benefited. You have Zoom. We all know Zoom benefited, right? Everybody started teleconferencing. Next thing you know, Amazon. Nobody can get out and go to the stores. Everybody's sitting at home taking advantage of Cyber Monday or whatever the case may be. So Amazon benefited. Walmart and Costco's and Target benefited. And Home Depot benefited. I don't really need to say why, because everybody got scared. Everybody heard it was going to shut down the economy. Nobody's going to be working. Oh my God, I got hiccups. Y'all give me a second. I tried to talk through the hiccups, but I had to wait. But anyway, you see so many companies that benefited. Walmart, Costco, so many people got scared. Everybody ran to the store. You know how the store was. Toilet paper was going crazy. So people benefited. So why am I saying that? Some companies actually benefited. Now, companies that got hurt, who got put in a hurt locker, to name a couple, restaurants, airlines, places like entertainment, like Dave and Buster's and Top Golf and companies like that, they had a hard time doing this. This pandemic hurt them very much so. So, but for companies that are like social media friendly, it changed the world of investing. Why did it change the world of investing? I'm always keeping in my head. I wanted a food franchise for a long time. But once I saw this pandemic, it shifted my way of thinking, right? Then I started to think, ooh, I don't want to deal with food. What is something that's essential? Because all the essential businesses were open. So now we got to look at it. We already said the government wrote a stimulus package. Also, the interest rates are very low. Where can a big investor place money? A lot of people are running the stocks because out of real estate and stocks, who got hit the most? Because businesses are not looking too good right now because the government is giving out PayPal protection plans, all that stuff like that. Real estate didn't go down as much as stocks. So people see a lot of opportunities in stocks. Look out, that's the fastest stocks have ever fell off in uh, the history of the stock market, right? So the next thing we got, let me take some of you guys and girls' question. What y'all saying live? Hey, we got Ms. Wanda Fields. How you doing, Ms. Wanda Fields? Thank you for checking in. She's saying hello to everyone that's catching this live. Now, the fifth one, we have an aggressive Fed. What does an aggressive Fed mean? This is somebody, the Federal Reserve is standing by with a checkbook, ready to do another stimulus. He's ready to do it. what's his name? Steve Munch, the Secretary of the Department of Treasury, he let it be known that he is ready to stimulate the economy at any time. So guess what? That gives investors confidence to know, oh, the Federal Reserve is ready to pump some more money right back into the stock market if we need it. So you have an aggressive Fed chair that as soon as the COVID-19 started breaking out, boom, he put in he immediately came out with stimulus packages. Right. Not saying it's a good thing or bad thing, but guess what? That puts a lot of um, confidence in the people buying stocks because they know the Federal Reserve is right there. Number six, ladies and gentlemen, a leading indicator. The stock market is a leading indicator of what is to happen. So it doesn't go off of data that we have right now. It goes off of what's predicted to happen. You don't buy Southwest Airlines because of what it done in the past. You're buying Southwest Airlines depending on what you think it's going to do in the future. Same thing with a Google or Amazon. Do you think Amazon is going to grow? So guess what? The stock market, people that invest in the stocks is considered to be a leading indicator of what is to happen. Yes, we're at 13% unemployment. Yes, companies are still closed, but everybody is thinking what is going to happen 3 months to 6 months from now. That's what the stock market trades off of. That's why you're seeing people jump into it, which goes into number seven. Everybody's optimistic. Everybody's optimistic about what is going on. It's a leading indicator. Everybody's optimistic of what's the economy is opening back up. We just saw on last Friday when unemployment numbers came out, unemployment actually went down. Everybody's excited and they're optimistic about the economy opening back up. This is why you're seeing upward moves in the last couple of weeks in the stock market, even though everything around you seems to be horrible. Let me see what you guys and girls got to say in the comments. She said, okay, thank you. So let's go do a little quick recap of what we just said. First of all, the government wrote a stimulus package. You know that, remember that $2.3 trillion stimulus package? Remember that, by the Department of Treasury that bailed out everybody, sent everybody stimulus checks, and a lot of that money got pumped into the stock market. Number two, the Federal Reserve lowered the interest rates to zero. When the interest rates are lowered to zero, where investors have to go? They only have to go to what? Real estate, business, or stocks. Stocks had the largest fall off, plus interest rates is at zero because I can't put money in savings and checking and bonds because the interest rates are so low. How can I keep up with inflation? What company, which indicate, not company, but which sector has the biggest return? Is it going to be real estate or is it going to be stocks? Real estate really didn't even have a chance to reflect. Real estate, it takes a while for it to see effects. But guess what? Real estate really hasn't seen a major drop off, right? We've seen people slow down on buying homes, things like that. We was getting to it, but guess what? Now people are jumping into particular stocks. Stocks fell off fast. So people look at a better opportunity there. Number three, where did the money go? You have to move your money. What is an investment manager? Where does big money move? You don't have to look at where money is. Look at big money move. What made me get into Southwest Airlines? Because I saw the government bail them out. I saw the government push money, $3 billion in the Southwest Airlines. I said, you know what? And they took warranties. I think I'll ride with the government. Where did the money go? The money is moving back into the market. Over the last couple months because investors saw a great opportunity, and they're very optimistic. Number four, not everybody was hurting. Some companies actually benefited. Companies like Facebook, Amazon, Walmart, Home Depot, Target, those companies benefited from the pandemic. Costco's, Zoom, those companies benefited from the pandemic because everybody had to stay at home, everybody had to move. So what did money shift to? Some companies actually benefited. Number five, we have an aggressive Fed chair who's standing by to write a check at any time, which puts confidence into investors. Number six, the stock market is a leading indicator of what is to happen. So everybody is optimistic about the future. It's a leading indicator. They're not going off of what happens today. They're going off of what's happened tomorrow. They're looking at the unemployment numbers. Okay, that's already happened. They're looking at the GDP. That's already happened. What do I think is going to happen tomorrow? People invest today depending on what they think is going to happen tomorrow. So the stocks are going up because people are investing depending on what they think is going to happen in the next 3 to 6 months. Number seven, optimism. Everybody's looking at everybody's optimistic about the economy and open. Everybody wants to jump back into the market. They think that, hey, when the economy swings those doors open, man, we're going to go off to the moon, right? Are they right? We don't know. But right now, they're optimistic, and the stock market is a leading indicator of their optimism. So when you look at everything that looks gloomy around you, think about it. In March, when the stock market bottomed out after the 2008 crash, even when it bottomed out, the news still was very bad. Even though we was recovering, the news was still very bad. So take a look away from you, and hopefully this kind of made sense to you to kind of help you make sense of what's kind of going on. KFK, what's going on? That's my guy. He said at this point, nothing's going to stop this bull. Yes, everybody, you know, right now we haven't still hit a new high yet, but we're in a 30% uproar ever since March 23rd, which was the bottom of the market at 18,000 points on the Dow Jones. Now we're sitting at 27,000. Our all-time high before all this happened was 29,500. We already know the bull is going to win. The bull is going to win in the long term. The bear will come out and scare everybody, but in the long run, the bull will win. So, ladies and gentlemen, I got to get running today. Hopefully this episode was very great to you. Hopefully this kind of clears up some things. When you're looking at, man, you're looking at unemployment, the economy is closed. You're looking at people in forbearance seats, unemployment. You know, you're thinking, what's going on? Why is the stock market going up? And your money's sitting on the side. Hopefully this episode will help you out. Until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. My name is Prince Dykes. This is the Investor Show. Peace. Be safe. I'm out. Thank you.